Hi guys and welcome back to Yashi. Today we're going to talk about the PCE report. I know it came out a few days ago. I'm probably one of the last ones making an update on this, but I'm going to wait always for the waters to calm down to then put out my opinion after I read everybody's opinion and put in my biased opinion because we're all pretty much biased, guys. Let's record and let's talk about what has pretty much happened. I mean, the ones that know. PCE inflation has been going down. We finally reached this 3.0 mark. PCE is a different kind of inflation report. We have the CPI that normally comes out at the beginning of the month. PCE comes out at the end of the month. The Federal Reserve looks at both to figure out if we're doing good on inflation or not, and then calculate their move in the next month. So the general, let's say, fear of the Federal Reserve is that inflation could spiral back up. Last month, as the, Federal Reserve didn't seem as hawkish as normally, people are already thinking these guys are going to drop their interest rates or they stopped here. And the fear was that that feeling of we could see a turnaround of what the Federal Reserve is doing could pump the market back up and increase prices and increase inflation, and it could spiral back up as where we were a year ago. The news is, no, it's not. The PCE is actually still dropping. If you look at the trend for the past couple of months, where it seemed like it was sticking much more, was staying stable at 3.4, 3.4, 3.4, it's now at 3.0. So the trend is still dropping. Slow, but still dropping. And if we look at core inflation, which is what the Federal Reserve focuses more on, as it excludes food and energy, because these are prices that are less controllable by the United States as they're more influenced by the global markets, we still see, yes, an inflation that is higher than 3.0%. However, still a negative trend. It is going down, and it is going down at an okay pace. It seems less sticky than general inflation that we see up here. So what are the good takeaways of this? The trend is good, the trend is negative. We still have 1% to go to reach the target 2% inflation that the Federal Reserve wants to reach. Does this mean that prices are going down? No. What it means that prices are growing at a more natural pace. So if you're expecting prices to drop and go back at what we saw 3 years ago, forget about it. We won't see that. There's some, let's say, sectors where prices are dropping, which are helping inflation. Gasoline is a good example. We're going back to, let's say, 2021 levels. I already made gas here in Virginia at $2.90 on 87, which is good. And if you look at the trends on AAA gas prices, we can see that, generally speaking, it is still going down. The trends on a national average is still, let's say, negative. We see a deflation of prices. If we look at a year ago, we're down compared to a year ago in energy prices, and we're down compared to a month ago. Definitely contributed a lot in the past 2 months in inflation, especially also we saw this in the CPI inflation. Now, on parallel to this, as we are on the BEA website report, we're going to also look at gross domestic, let's say GDP, the gross domestic product, which is how the economy is doing. On one side, we're seeing inflation slowing down, which could lead to the thought of people are spending less money, people are not buying as much, prices are slowing down, the economy is shrinking, which was the general fear of the Federal Reserve and many other economists. We could see let's say, strong landing, a bad landing, a crisis, a financial crisis. However, if we look at the GDP, we can see that GDP has been still growing. Generally speaking, we're still in positive territory, even with a slowdown in the inflation. Real GDP increased at an annual rate of 5.2% in the third quarter of 2023. So we're seeing still a growth in the economy, slowdown in inflation, which basically leads to the conclusion of this could be the soft landing that people were hoping for. With that said, inflation is good, it's not deflation. Prices will stay where they are. How will the Federal Reserve react to it? I mean, the target is still 3%. I don't think we're going to see a drop soon, also because part of the inflation is also the expectation of people. And if we see a Federal Reserve that is now pointing back down with interest rates, people could get euphoric again, especially in some sectors that the Federal Reserve is trying to tackle, which is housing. Housing hasn't really moved a lot. Housing prices are pretty much stable, have been stable in the past 2 years, no matter the interest rates. And dropping interest rates now, yes, would make housing more affordable in a very short period, but it will also create a market that right now has a very low supply, where more people are flowing in because it's getting more affordable to get a loan, and pump up prices, bringing them to the same inaffordability index that we saw in the past year, growing, growing, growing. So I don't think that the Federal Reserve could move a lot. It wouldn't be in their own interest. Plus, having that safety cushion from a potential crisis in the future is nice, because if you have this high interest rates right now and you still have a growing economy, I would keep it this way. And if you see the economy going down, that's when you can pump back money into the economy. That's the way I see it. This is not financial advice, but from an economic perspective, and I have an economic background because I studied economics and finance, that's pretty much what I would do as, let's say, the decision maker in the Federal Reserve. So should you expect lower interest rates? I mean, even if interest rates by the Federal Reserve won't go up or down, the market expectation by banks could lead to a potential drop in mortgage rates, as we saw in the past 2 weeks, where interest rates dropped from 8% now to the low sevens, and without the Federal Reserve doing absolutely nothing, just because of a market sentiment, which is good. So if you keep on seeing this trend of continuous economic growth and deflation, the market expectations for a stabilization, the bank expectation of stabilization might be a little bit more optimistic, and we might get closer and closer to the Federal Reserve funds rate. It's impossible to get there because banks still need to make money. However, we might get a little bit closer to it. Is there anything else to say? Normally, I do a report check on what I expect in the future. I normally do it towards the release of the CPI report, so I won't do it here. The fact is, the situation is looking pretty good. However, the sensation of Americans is still pretty negative. Americans still don't have a lot of money, but there was one really cool trend, which is, this is a report from this website here that I looked at, which is the savings rate. So in the past couple of months, we saw shrinking percentage saving rate. We went from 5.2% of income being saved to 5.3. It went growing a little bit, then 4.8, 4.2, 3.7, and now there's a little bit of an upward trend. This is not big, but the trend is good. So inflation is slowing down. People are again on a little bit, not big, but they're saving a little bit more money, which is good. And the GDP is in positive territory. These are, let's say, the main takeaways of today's video. I don't want to make a 20-minute video. This is all for now. Thank you for watching. And if you found some value that helps you, let's say, gather a quick resume of what happened the past couple of days instead of reading everything, please leave a subscribe, because I'm planning to make many more of these kind of updates. Thank you and ciao.